Welcome back, traders, to another episode of the Refined Q&A podcast, where we talk everything no-nonsense Forex plus more, coming to you each and every week. My name is Dillon, and I am joined here with Judge. Now, today we were meant to be talking about exit indicators. However, there's been some big news that happened this past week, and that has to do with the Euro Currency Volatility Index, or EVZ. Now, if you have been following No Nonsense Forex for some time and have made your way through all of the content from VP, you would know that the EVZ plays a big part of your trading strategy, specifically for risk management. If you have been using it, you would have noticed that in this past week, the EVZ has been stuck on 6 and has not moved. So today we'll be discussing what exactly has happened and if the speculation is true that the EVZ might be no longer available. So what alternative tools can we use that may be similar to the EVZ and fulfills that purpose? Now, before we get started, of course, you would have heard that this podcast is now affiliated with Ultra Capital, the same Ultra Capital who is affiliating with the No Nonsense Forex Discord. You may have seen them there before, with very favorable evaluation rules for traders compared to other prop firms such as 6% profit target, 8% drawdown allowance, 2% risk per trade, EAs and copy traders allowed, all within a very favorable 180 days. Ultra Capital is well suited for no-nonsense Forex traders specifically. And unlike other prop firms, Ultra Capital also offers gold and silver to trade. Adding these to your plan does not cost you anything and does not change the evaluation requirements, thus increasing your chances to success by adding in 2 additional instruments to trade. Use coupon code NNFXR, that is the letter R, to receive a 5% off your joining fee. The use of this affiliate link also helps us out on the channel. So if you are ready to start your prop firm journey today, consider Ultra Capital using the coupon code NNFXR. So with all that being said, we do hope you enjoy this episode. So let's get to the bottom of what actually happened to the EVZ. So trades for the week this week. Well, for myself, it's been a pretty average week. Nothing really too much happening. However, I did notice that there was some moves in the market actually. Last week, I noticed that there was some pretty big moves on the Swiss, and just talking with Judge just before the podcast started, we were trying to figure out exactly what happened there. So I think Judge knows that there's a little bit of news that's happening around the Euro and with Lagarde speaking there. So that might have been the catalyst for that. But CAD Swiss, that was about 150 pip move. So it's a little bit more volatile. And talking about volatility, today's episode is going to be a good one because we're going to be talking about the EVZ. And yeah.
Or is it EVZ?
Oh, yeah. What, ZZ?
Z. We're Australian, mate. It's Z.
Oh, maybe.
Although we do have a lot of Americans listening, so it's Z.
I've been listening to VP too much.
Well, we could do the obligatory inclusion that, like the Wiggles do, and say Z or Z.
Well, I don't think anyone else would know what the Wiggles are except for Aussies.
Dude, everyone knows who the Wiggles are. What are you talking about?
If you don't know what Wiggles are out there, people, you're missing out.
Google it.
Yeah, that was my childhood there. That and Teletubbies. Anyway, we did talk about this a couple of times, and we did mention EVZ's picking up in the past. Volatility looks like it's picking up as well, but really we might have these quick blips of volatility and big moves, and then the market might just stagnate for a little bit longer, and that's just the market that we are in. So I guess that is what it is. We'll have to try and see moving forward what the market is going to do, where the volume is going to be, because although there was a couple of big moves, particularly on the Swiss pairs, yeah, the market might be, again, go back into a more stagnant phase and not really do much again after these big moves. So it's the market's a little bit interesting, and I think today's episode, we're going to talk a little bit more about volatility and things like that. And I think it's very important to understand what the markets are telling you and what your indicators are telling you. And now with the EVZ gone, or Z gone, we have to really understand how to look at the market conditions and trade the market conditions appropriately, and how to manage risk and all those things. So nothing too much to add from me in terms of trades for the week. Pretty normal week, I guess. But how about for yourself, Judge?
I've had a bit of activity. So as you mentioned, there is quite a bit of return volatility. We call it volatility. I call it volume, but we're not actually referring to either of those in terms of no nonsense Forex. We're talking about the overall market volume. So how much money is flowing through the FX market at the end of the day, like big enough, like enough that it makes a difference on the daily chart. Because ultimately, that's what this episode is going to be about. So as everyone would have recognised that's following along and trading with us weekly, EVZ has kind of been flat all week. It's kind of been dead. And what do you do? What do I do? We're going to share what I do. But ultimately, I do use EVZ or variants of it. And this week, it's been flat. But that's because it's been broken, or so we thought, because it's been broken a few times over the past few months. As you will have recalled from previous episodes, I leave my algorithm running even through low dead market periods because my algorithm is always like a forward test. But then when it copies to my other live trading terminals, that's where I apply changes to the money management or the risk management based on, well, for example, the EVZ. When it's low, I switch it off on all the other live terminals. So although my algorithm is still trading through this dead market period, it's not copying through to any of the live terminals when EVZ is low. So this last week, I haven't been in any live trades because I just didn't trade because it closed on 6. I kind of need it to close above 6 and convincingly. Otherwise, it could just hover up and down, and then you're getting in and out all the time. But yeah, with this now broken, I have another indicator which some people have been seeing that I've been talking about, and that is telling me there is volume. So I think from next week, I will start taking trades again on the live terminals, and that's my week.
There we go. So a very, very interesting week because, as Judge mentioned, the EVZ has stopped working. Now, if you do follow the EVZ and you do use the EVZ, then you would have noticed that the EVZ in the past week has been stuck on the value of 6 and it has not adjusted. It's been flatlined on 6. So particularly for no-nonsense Forex traders, I know there's a lot of eyes on the EVZ and a lot of traders using the EVZ, of course, the no-nonsense Forex way. A lot of people within the Discord community were a bit concerned. And as Judge mentioned, we originally thought that it was broken for a little bit, but I think there's a little bit of an indication that the EVZ might not be just broken, but might no longer exist. Judge, do you want to talk about exactly what happened to the EVZ and how some people might be feeling?
So we were meant to be talking about exit indicators in this episode. And, and obviously I tried to drum up some interest in to get questions, but the Discord channel has just been full of EVZ. What's happening with the EVZ? Someone emailed the CBOE and got the response that the EVZ has been discontinued. So it looks like some people are in disbelief, some are in denial, that thinking that it's still going to come back, some are in outright panic. So we thought, okay, let's do this short segue and let's talk about EVZ and in general other tools. Because VP has mentioned a few other tools that he uses, and they're discretionary tools. And it's up to you whether you use them, and it's up to you to test and figure out ways to make them work. But that's pretty much all he's gone into. So we thought we'd do an episode on, well, what an apt time, what a good time to do it. Let's talk about the EVZ as an other tool, in inverted quotes. So what is the EVZ? Well, the main thing is, if you're following along, if you haven't listened to VP's stuff about the EVZ yet, in a nutshell, it's a external. I'm going to try and refrain from calling it volume or volatility because it's neither of the two. It's an external tool that correlates with a high-level view of money flowing in and out of the FX market, and so, as trend traders and as no-nonsense Forex traders, we know that we need money in the FX market. We need it flowing in for trends to actually happen. So the premise behind this tool, and a qualitative premise it is that, when there's not much money flowing through it, we kind of probably should be very careful, if not trading at all, because the probability of trends goes down. Even though we use technical ways to get in the market and we take signals to get into trades, naturally, if there is some sort of regime shift or there's a dead period, that's going to impact the probability and the likelihood of our edge. So we want to know about those periods. And VP has talked about various different market affecting periods that can happen that you can use these other tools to gauge. Now, you can't backtest them usually. The EVZ you can, because there are EVZ indicators out there. I encourage you to find them on the Discord. But they are all in the past. They don't go forward. But you can test the EVZ when it comes to money management and when it comes to risk management. And that is what I suggest you do. I suggest everyone does. It's not just listen to what VP says and don't trade under 6 or don't trade under 8 or don't trade under 7. Work out what works for you and your algorithm. Now, there's not going to be a lot of variance because ultimately it is a broad tool that measures money flowing in and out of the FX market. But the reason I've mentioned that twice now is because if you're ever going to find a replacement or use this tool properly, you need to understand how it works. And that's what we're going to talk about today.
I'm very excited, and thank you, Judge, for explaining that. And I have seen some of the comments going through the Discord as well, and can concur that there is a few people out there that are in a little bit of angst as to what to do now. And then hopefully this episode, we can guide you in terms of finding some alternative tools to use for your trading system, so that way we can incorporate some of the same premises or the same purposes for what the EVZ used to do for you. So as Judge mentioned, we would use the EVZ to adjust our risk or whether to not even take any trades on, depending on the volatility of the market. As trend traders, of course, we know that we need volume and volatility for trends to occur. And that is where having these tools in place that we can use at our discretion, we can incorporate those tools into our trading strategies and hopefully make our trading strategies work a little bit better.
Let's talk about that for a second though, Dillon, because
of course
I heard you pause when you said the word discretion. Because as I know that you are, as a pure technical trader, you hate discretionary stuff.
Well, this is a good point, because Judge and I were talking about this before, and this is where the term tools, because we're calling the EVZ a tool and not an indicator, for example. Like you can plot the EVZ. I'm gonna use that interchangeably, by the way, EVZ, EVZ. You can plot
this. Just call it EVZ, all right? This is our podcast. You're all assimilating to our English, all right?
The EVZ, you can plot the EVZ as a indicator, and it looks just like an indicator on the chart. And that's where you can use this not as a discretionary type of tool, but as a, I guess, hard and fast rule, more or less like, say, how algo traders use, indicators, or how anyone uses indicators. However, it does take away to what Judge was explaining before, and I guess what a lot of people, if they do not understand what the EVZ actually does and the purpose behind it and how to interpret the EVZ, that's where building the understanding and the fundamental case of what it does, and then building the premise behind it of how to incorporate that into your trading strategy is very, very important. Now, I go back to what we discussed about using it discretionary, because it tells more or less a story of how the market is operating and how the market conditions are. Because by looking at the EVZ and by looking at, the levels behind it, you can really interpret it discretionarily, and then you can adjust your risk and things like that accordingly. Now, when we use discretionary tools, for example, they don't have to look like, a chart or an indicator like the EVZ does. There are other tools out there that you have to really assess the market conditions through what would be more or less not done by what you can see using a chart. And that's where you have to actually, you can't use a quantitative approach. You have to use discretion to interpret the information and then base your decisions off of that. So
it's a bias. It's a bias at the end of the day, because it's not an indicator, so it's not related to your signal. at all.
That's right.
Your signal is your signal, right? Because that's based on math. This is based on measurement of the market. Now, I think the best way to describe all these tools is they all fit in the same basket. And some of the examples VP has given is, for example, the IG client sentiment index thing that he gets from IG, which basically shows, how many traders are net long, net short on different things. But if you remember the context of how he explained that tool, is it gives you an indication, and again, this all comes back to the big banks video that, institutions and banks, they move the price and they manipulate and they aim to take your money away. So naturally, he's looking at the client index, sentiment index, and going, okay, if there's a crap load of people net long, they're going to take it short. The idea here is not to use that as an indicator and go, oh, crap, I'm not going to take any long signals because, they're all 90% long. It's basically to say just avoid, because manipulation happens at these levels. So in that sense, it's not an indicator. It's not a technical tool. It's a bias, because you can look at it and identify periods of like anomaly periods, and dead markets is an anomaly period of a sense. It's a long, slow anomaly period. And the EVZ outlines that. The Swiss crash of 2015 that people were talking about in the Discord all the time, that happened when the IG client sentiment index was very net long a certain direction. And that kind of gave people an indication that something big was about to happen and be careful and avoid. And yeah, it went net short. It went short very, very far in a massive flash crash. So in that sense, that's why we look at tools, not to make our decisions on when to enter or exit, but just to have an understanding macroeconomically of what's happening in the FX market.
Absolutely, Judge. And I think that having that understanding of what the EVZ actually does and what the purpose behind it is very, very important moving forward to what we can do now that it doesn't exist anymore. It's been discontinued. What can we do now to find other tools or other things to fill that gap that we, of course, don't have anymore with the EVZ? So I guess for myself, most of you would know, if you've been listening to the podcast, I actually don't use the EVZ. So I solely rely on my volume indicator to actually do all the heavy lifting here between each and every pair. Now, of course, by doing that, I don't incorporate some of the things that the EVZ actually does, like measuring the overall, or I guess majority of the expected volatility or market moves, because of course the EVZ does capture 70 to 80% of the market, I suppose, in terms of expected volatility. But saying that, relying on just my, I guess, decent volume indicator, it can still keep me out of the, I guess, the dead zones as well, and still keep me out of the periods where the market isn't actually moving, or where, for this particular currency pair, because it's for each currency pair where the currency pair isn't moving, and it still fits the purpose of, I suppose, the EVZ. Now, of course, as Judge mentioned just before, the EVZ should be used as a tool, and it shouldn't be measured as the overall, or looking at the overall market, and it's separate from actually looking at, for example, your signal. So it's separate from a volume indicator. And so saying that, I don't actually have any, I guess, discretionary tool like the EVZ that actually fills that gap. So if you're stuck without an EVZ now, one thing that I could suggest is, because I know a lot of people, and we mentioned this in the past, that a lot of people want to take all no-nonsense Forex tools, indicators and the like, and put them all in exactly how VP has done it. And it goes back to what we spoke about last episode about force-fitting indicators. Now, I'm sure if you've put together your algorithm and you now have a very good understanding of how your algorithm works, and you've built it from the ground up and then incorporated the EVZ, you should understand and know what your algorithm is doing now from backtesting, how it performed without the EVZ, and then of course adding it in, how it performed after adding in the EVZ. However, saying that, if you have made any changes or the like with your algorithm during that time, it might be worth going back and revisiting how your trading strategy performed when not incorporating the EVZ now, and just see if it still does perform, relatively decent. Now, of course, for a lot of people that do trade the EVZ and do understand their trading algorithm, then you would know that you would prefer to have some sort of volume or volatility based discretion behind it that adjusts your risk management, for example. And that's fine. And I think Judge will be able to talk a little bit about alternative options, because I know, Judge, you mentioned you used the EVZ, but now because it's gone, there might be some really good alternatives for a lot of no-nonsense Forex traders out there that still want to try and continue to use a discretionary tool or bias filter for their trading strategies. Judge, do you want to talk a little bit more about what you would recommend for some no-nonsense Forex traders?
Sure. I use the EVZ because I noticed, naturally, that my algorithm doesn't win when there's no volume, and that's talking about volume across the spectrum. So for me, it was anything under 6, I don't trade. I tested anything under 6, just trading with half risk, but it was kind of like it just treaded water. So there was no point trading in the first place, because all you're doing is giving your broker commission. So it was like, I just won't bother. And yeah, okay, that's boring. That's not sexy. You're not trading. You feel like, a man with his manhood chopped off because you're not really trading. And people are asking you, how's your trading going? And you feel bad because you're like, yeah, it's going great. And deep down that you're not really trading. So, and let's face it, that's all psychological stuff, right? That's all inside us. So realistically, it doesn't make you any less of a trader if you are not actually placing trades, but you are still monitoring the market. You are still a trader. You still have an algorithm. You still did the work. So let's just get that out there, okay? There's nothing wrong with not taking trades because you know the market conditions are not right. The first thing I did, and I'm recommending people that use the EVZ to do, is first understand what the EVZ and how it works, like what it is and how it works. Basically, what the EVZ does is it measures the options on the euro-dollar market. So, and it applies VIX math. If you don't know what VIX is, go Google it. I'm not going to go into it here. It applies that math to give a reading of how much they're expecting there to be change in the volume of the euro-dollar exchange in the next 30 days. So in a nutshell, that's a really broad explanation of what it does. Sounds really complex. That was actually a really dulled down version of it.
I think if people understand how options work as well, that also does help as well.
Yeah, I mean, you don't have to go out and get a college degree on what options are, but essentially it's a good indication from an institutional level of how much money is going to be moving through markets over the next 30 days. But that can change, obviously, with major news events and major things happening in the world. But essentially, it puts this measure on the euro dollar. Why? Because the US dollar is the global reserve currency. And let's face it, it is kind of an international benchmark for value for everything. You can get a US dollar denotation on everything. The reason why that's important is because, as we know, the euro and the dollar, those two particular currencies, make up a huge portion of the FX market. I think VP said something around 75, 80% in the past. It could be more. So as we know, if we know there's a lot of exchanges happening between those two currencies or derivatives of those two currencies, we know that's making up a large portion of the FX market. And if there's bound to be a lot of activity on those two, then the FX market is going to be moving. So that's why we use the EVZ, because if that figure is low, then it basically means the institutions aren't really forecasting a lot of price movement and a lot of price exchanges, or exchanges of price between the two, meaning there's not going to be a lot of activity on the FX market. So that's where it primarily comes from. And the reason why it applies to all pairs is because, shock horror, if you didn't know this, you will now know it, but all pairs, even the cross pairs that do not involve the US dollar, are actually still a derivative of a US dollar pair. So Everything goes through the US dollar. That's why the US dollar and exchange rate matters. That's why it is the reserve currency at the end of the day. So that's what the EVZ does. If it's gone, you essentially just have no way of knowing, what kind of institutional activity they're expecting in the next 30 days, which means you don't really know if it's a dead market or not. And call it what it is, it's a dead market indicator. It just tells us when shit's dead, right? So what do? Well, you could just ignore it, like what Dillon does. Just if you go down that path, you will take drawdown. But that's okay. Life is full of drawdown, and live with it. It's fine. Maybe, and that's why VP even says reduce your risk a little bit when EVZ is low. I can see in the Discord channel that people are now starting to reduce risk just because of the unknown. I don't like the unknown. So what I did was I created my own VIX. And I've talked about it a little bit in the Discord. Some people say I'm shilling it. I'm not shilling it because I'm not sharing it. Let's get that straight. Yeah, I created my own VIX. It's called the Judge VIX or the JVIX, or maybe we call it the JVZ. JVZ? Yeah. Sounds like Jay-Z.
Yeah, Jay-Z.
But essentially, all I did was I took the VIX and the VIX math, and I applied it to other markets which correlate with the euro dollar. Shock horror, right? And it worked. Obviously, it's not a direct replacement to the EVZ, but it does correlate with, FX volume in the market. I've been testing it for about 18 months. So it works. I've got enough data there to know it works, to basically tell you all that you can do exactly the same thing if you really want to do this. Now, I had a few reasons why I did this, and it wasn't just because I wanted to replace the EVZ, but it was for 3 reasons. Number one, I wanted a faster indication of exchange volume. I was telling Dillon the real reason. I'm not going to share. I was telling Dillon the real catalyst of what got me really riled up and why I created this, but I'm not going to share that. But essentially, I wanted to not miss moves when stuff went from being dead to being very live, very fast. And VP has even said this. He said, if we're in a dead market, don't be surprised if you miss the first big move out of it. I don't want to miss that first big move. So the EVZ, as I've said before, is a lagging indicator. You will generally miss the first big move because it takes a while for the EVZ to catch up and basically give its indication the volume has returned. So I wanted something faster. Second reason is obviously I wanted a way to potentially mitigate risk during dead markets. So I wanted to trade dead markets. I didn't want to just sit out, so I thought I need to find a way that helps me change my risk, mitigate my risk during a dead market period. And thirdly, the main reason I created this JVZ is I wanted an alternative to the EVZ just in case, shock horror, like it has now done, it's disappeared. I guess what I'm saying is if you can find a way to correlate with those two currencies and the market and the volume that's in it, find other markets, find other things to draw a VIX against, you could probably create your own version that will work. But I guess if you're going to do this, it's going to take time. If you're going to do this, you need to be doing it for the right reasons. Don't be doing it to create a new indicator. Don't be doing it to shill, as people say. Do it because you need a replacement. And remember why you're doing it. This is a bias. Right. It's a bias. It's not part of your algorithm. It's optional. It's discretionary. And it gives you an indication. It's a tool. Don't go down into the rabbit hole and build it into the algorithm so that it actually alters your signals, because it's not a technical indicator. It really isn't. It's not it's not close enough to the market to give you clear signals to go in or out or give you even an edge. So if you're going to create it, it's an option. It's a tool. And again, use it like a bias. My strongest recommendation when you're using any of these tools as a bias, try to play around with your money management. And we will go into this in this podcast in future episodes when we get to the money management, the risk management stages. But it made sense to do it today, this podcast episode, Absolutely. Because of what's happening to the EVZ. But essentially, all your testing around the EVZ or alternatives to the EVZ should be around money management. So playing around with your risk at certain levels, playing around with the ratio of your 1.5 times ATR to 1 times ATR, that sort of stuff. And they're the clues I'm going to give you, right? But definitely listen to VP when he says, in periods of dead markets or low volume, don't go to lower timeframes. He's just said that so that, he doesn't piss off majority of his viewers. But no nonsense Forex works on daily. You've built it on daily. It's not going to work in lower timeframes. Trust me on that. You might have some success. You're better off just creating a lower timeframe algorithm. Don't use your higher timeframe stuff on the lower timeframe because there's a lot more to consider. You're better off also just listening to VP when there's a low market or a dead market and just taking all your profit off at 1 times ATR. Test that. See how it looks. Play around with it. Play around with different levels of scale outs. Like, we scale out 50% at 1 times ATR. Try scaling out different amounts. Try scaling out 100%, 90%, 80%, different amounts. And it does make a difference. And again, we'll go into that in the money management section. And there is actually a science behind that. To all our quant listeners, there is a science behind that money management side. But yes, this episode has just been about what you can do in this scenario where EVZ might be gone forever, but you're going to be okay.
It's a very, very good point, this episode with the EVZ and how to find alternatives. It is very, very important to realize that it is not a filter like your indicators. It is more or less a money management tool like Judge mentioned. And Judge made a good point. If you're not using the EVZ, you're going to find that you going to be getting signals, possibly, well, a lot more signals. Even if you've got a volume indicator, like for myself, even if you've got a volume indicator that does incorporate dead markets, you're still going to be taking trades, some losing trades, some possibly winning trades where the EVZ might have told you otherwise. And this is when, of course, drawdown might be impacted as a result of this. And because there might be an increase in drawdown, you do have to adjust your risk lower overall when not incorporating EVZ, and you're going to be adjusting your risk overall throughout, no matter what the market conditions are, and that's the basis of not incorporating the EVZ. And that's where it's so important. Judge, you made a good point, and thank you for adding that you need to understand what your overall trading strategy is telling you. You've gone through the back testing, see what your drawdown is, and then adjusting your risk parameters, of course, accordingly. Because if you're, got X amount of drawdown, you need to, of course, find an alternative to that drawdown in your back testing, because of course drawdown is bad. We don't like drawdown. So you have to either one, adjust your risk, or two, find an alternative approach, alternative indicator, or alternative tool like the EVZ or alternative to hopefully mitigate your drawdown and reduce your overall risk within the markets, but still be profitable. And I think, Judge, just at the end, you made a really, really good point to distinguish the difference between the EVZ and how it has to work with your trading strategy. We mentioned this in the past, particularly with the baseline episode. The EVZ and other tools that you do use, and whether that's tools that you use within your indicator qualitatively, or whether it be discretionary or quantitatively, is your tools that you do use have to complement your trading strategy. And is talking to Judge before the podcast, one of the reasons why he looked for alternatives, because sometimes, and it depends on your trading strategy, sometimes the tools that you might be using may not complement what your trading strategy is telling you. You might get conflicting signals, and you might get signals where your trading strategy might want to go, might want to enter, but your other tools like the EVZ might want to keep you out of trades, and you might be missing really, really good trades and the like. So that's where it's very, very important to understand what your trading strategy is doing, understand from a qualitative view what all these different indicators, but also different tools like the EVZ, how they work together in unison, complement each other, so that you are getting the best signals possible. You're not missing out on the big winners, but you're also staying out of those dead zones, like how the EVZ or other tools that even now you might be able to create, like the Judgefpv, the JZ indicator or tool.
JZ indicator.
how these have to work in unison so that you can build a really, really killer strategy that is trading the market that is in front of us, because that, as traders, is what we have to do, because we can't, of course, tell the market what to do. We have to trade the market. So the market comes first. Then our algorithm has to complement what the market is telling us. So I think today's episode, of course, the timing, as Judge mentioned, it's been very, very important, and that's why we had to put the exit indicators episode behind just for 1 week, so that we can quickly get this EVZ news out to you, and the alternative approach on possibly how you can incorporate other tools and the like for your trading strategy now moving forward, so that way you've got something that can measure overall market sentiment and expected market moves. So I think today's episode is a very, very important one, and a very, very good one, and I think one that will be well received, particularly at the moment, for a lot of no-nonsense Forex traders out there, and we do hope it has helped you a lot. Judge, is there anything you want to add here? That might be it.
Just before we wrap it up,
Yep.
Wanted to, I suppose, touch on our schedule for the podcast and some of the things we've been talking about. That's a very good point. Because,
yes.
You may notice that we didn't release an episode last week, and we're meant to be coming to you every week, but life gets in the way. I get sick a lot. When you have a toddler, they give you every disease under the sun. It's a fantastic
experience,
with, right? and all the parents out there will understand. But obviously, we're in this to give you guys content and help you guys with your journey. So what we've also found is the live shows that we were doing every Sunday morning in Australia, or Saturday night in America. The content was good. And it is good, but obviously, when I'm really tired, it's like 5:30 in the morning when we're doing that show, up. And it takes me about 15 minutes to really snap into it and let the coffee sink in, if I've even had coffee. So what we found was we tend to bounce off each other a lot better when we pre-record this stuff. So I think we're going to move to pre-recording a lot of this stuff and then releasing it on the Sunday, if not Monday. Mainly also because VP is now releasing the 10, what's it called? The 10-minute contrarian.
Yeah, 10-minute contrarian.
10MC. That's coming out Sundays as well. So we don't want that to clash. We don't want to give you information overload. So we will record every weekend, and we will release every weekend-ish. On the Sunday or the Monday. So it doesn't clash with VP. But at the same time, we are still going to do live shows. We're thinking once a month, maybe once every 3 or 2 weeks as well. And we're thinking of, bringing guests on and doing rapid fire sessions so that people can actually come to these events and just ask questions, and we'll answer them live with the guests. And who knows, we may have some very special guests. We will see.
I'm very, very excited for that. And I think, Judge, just to touch on that point, I think it still keeps in mind the Q&A aspect of course, this podcast, because I know we've been getting a lot of questions, particularly this week, about the EVZ, but also, of course, in other weeks, as, of course, if you've been listening, you would know that this podcast is very, very reliant on your feedback. But still, the floor is open for other people to get involved and to join in the fun of being on the podcast and going through everything no-nonsense Forex trading. So very, very excited to keep that one going. And I think it does work a little bit better. Yes.
Do not message me and ask me for my indicator, please.
It's not happening, everybody. You've heard it here first. Absolutely.
Not sharing it.
Nah. Judge has hinted.
He's into that.
Exactly.
I've told you how to go make your own. Right. So if you want to make your own, that's great. I can help you. I'm more than happy to give you tips and whatever, but I'm not giving it out. I was actually going to possibly share this at NNFX Live 2021, 2022. That I was thinking about. It was still in very early days at that stage, but now it's been quite tested. So it might make it out there one day. It won't cost anything, obviously, but I'm not really just going to shill it out for people to go use and share and take it and rebrand it their own and sell it and all that sort of stuff.
That's very important.
So I'm not into that. Especially, I think I'd be more comfortable doing that or releasing it once everyone else has created their own as well. So I don't want my one to be singled out or used for nefarious purposes. So there you go.
Hopefully people have made it this far into the podcast to make sure they understand not to message Judge.
Don't message me asking for the indicator. All right.
Well, everybody, I hope this episode was one that was very, very insightful, particularly for what has happened this past week with the death of the EVZ. Possibly. Maybe it might do an Undertaker and actually be resurrected sometime. WWE reference there. Anyway, thank you all for listening in. Do appreciate all of you, and we'll see you in the next episode. Happy trading out there, and catch you later.
See ya.